Go ahead.
All right, so we'll go ahead. All right, so just a little bit about MG Residential, which is the team I'm a part of. We are part of the larger Keller Williams Capital Property, but we have 15 years of experience throughout our team. We work in the DC, Maryland, and Virginia areas primarily to service and provide over 300 homes. In the 2020 year, we provided 300 families with new homes in the area. And we have a full service team, lots of different members. As you can kind of hear me talking to Shalisa, she's a part of our coordination team that helps make sure that there are no gaps in your process to purchasing a home. We have people, backups, and an entire team to support you in that effort. All right. One of the main missions of MG Residential is to transform lives and communities and careers through the real estate process. So really helping to provide you all with interactive and educational information through seminars like this, as well as our consultations to get people into the real estate industry, help them understand the wealth potential that is associated with becoming a part of this and becoming a home buyer. Our team is well known in the area. We do residential, commercial, as well as developmental real estate. We're located in the Brookland area, and we participate in our leading projects, such as the MLK Gateway project in the Anacostia area. So we're doing a lot in the community and really just hoping and helping everyone be involved in the process. All right, and just a quick moment to introduce myself. Again, I am Kristin Thompson. I am a licensed DC and Virginia realtor on the MG Residential team. Soon, I will have my Maryland license, so be able to service you guys for the entire DMV community. One quote I like to start the presentation off with as we're kind of goal setting and preparing you guys for the future is when you set your mind to achieve something, you must allow yourself the opportunity to get it done. So I like to think that this is the first step of many to helping you guys achieve your goals of home ownership. Really want to kind of congratulate everyone for chiming in to the presentation and really trying to set yourself up for success as you look to purchase your first home. All right. So how to buy your first home in 2021. I know you guys have heard interest rates are super low. They're deferring student loan payments. There are lots of different grant programs available to individuals in order to help facilitate the home buying process. So what our team likes to do is provide you guys with the resources and equip you with all of the tools that you'll need in order to achieve your homeownership goal for the 2021 year. So throughout this presentation, I'll just be going through the entire process from making the decision to buy a home, which is really important, and you want to make sure you're very thoughtful about that, to hiring a real estate agent like myself. And hopefully, based on all the information I provide, you guys will be confident and comfortable moving forward with me and my team to help you all through the home buying process, all the way through securing financing, finding the home of your dreams, contracting it, getting rid of all of those nasty home inspection things until the final step of getting your keys. So we're going to walk you through all of that today through this presentation. And again, as I mentioned, if you have any questions that come up, please do not hesitate to just interrupt me with your questions.
Hi, Kristin. I have one question.
Yep, go ahead. And if you don't mind just introducing yourself real quick.
I'm sorry?
Oh, do you mind just introducing yourself?
I'm sorry. My name is William Nunnally. Nice to meet you. Thank you for your time today. I just have one quick question. Do you know if any way that we can actually obtain this PowerPoint?
Yes. So if you made sure to RSVP through the Eventbrite link, then we'll have your contact information and we'll send everyone a follow-up of this information.
Okay. Thank you so much. Sorry.
Yeah, no problem. Any other questions before I get started? And if you did not come across this through the Eventbrite link, if you're chimed in on my Instagram, if you want the follow-up information because you can't see the presentation, just DM me and I will make sure to reach out and follow up with you guys. All right, so the first step of the home buying process is to make the decision. And since you're here, you already have your first step foot in the right direction. So when you're making the decision to transition from renting to buying, you want to make sure you consider a few different important factors. Purchasing a home is an opportunity to build wealth, change of lifestyle. It really allows you for a lot of different opportunities and flexibilities within your life. But when you're considering these things, you want to look into cost, considering your personal preferences, and then making sure that you can afford and have all the motivation you need to move into the perfect home of your dreams. So, want to take the time to just kind of run some numbers with you guys. If you are considering a transition from renting to purchasing, you want to do an evaluation of your current expenses. So, looking at how much you spend on your monthly rent, utilities, all of those, living expenses, and then kind of translate that into how you would like to live in a purchased home. So, here I have an example on the screen that really just shows if you're looking to purchase a home at about a $450,000 price range, which is about the median house price in the DC area. Of course, there's a lot of variety in the area, as low as 250, as high as $1 million. But we'll just do an example somewhere in the middle. But if you're looking to purchase a home at $450,000 and you're utilizing a 10% down payment conventional loan, there are a lot of different loan options for you to consider. The FHA loan is something that would allow you a smaller down payment as low as 3 to 3.5%. To really reduce your out-of-pocket expenses. But for this example, if you're doing a 10% down payment on a $450,000 home, that's going to result in a $405,000 loan. If you do all of the calculations, and I'm not a lender, but I can definitely put you in contact with someone who can explain all the details of this process to you. But if you run the numbers and do a comparison on about a $400,000 loan, you're going to be looking at paying about $2,500 monthly. That's going to be your principal and interest on your loan, your home taxes and insurance. And then a lot of cases, you're going to be looking at additional homeowner association fees if you're looking at a condo or a townhome in a specific community. So you want to make sure to factor in those three groups of expenses when considering what your potential expenses are going to be for a home purchase. So you can see in this example, if you're renting at $2,200 and you're looking to purchase a home at $450,000, there's only a small increase in your monthly expenses. And while almost $300 may seem like a lot to anybody, especially in the middle of a pandemic, this small increase in your monthly expenses can translate to a significant increase in your overall wealth. So that's one thing we want to just kind of go into next. All right. So when you're making the decision to buy, always consider the motivation and the potential to grow your wealth. So when you are calculating your net wealth as a renter, it's only going to be a compilation of any money you have saved. And as I mentioned, in the middle of a pandemic, a lot of people are, dipping into their reserves or whatnot as the situation may, call for it. But as a renter, your only source of net wealth would be the cash you have in the bank or your investments. When you transition to home ownership, you significantly increase your potential net worth. So for a $450,000 home, from our previous example, you'd be looking at a potential net worth increase of over $230,000. So that provides you a lot of benefits in the future for future investments, which is something I love to talk about. So if you're interested in that, let me know. And different loan potentials. But you can see here very clearly that when you choose to transition from a renter to a homeowner, you significantly increase your potential for future wealth. And I know people like to say home is where the heart is, but home is also where the wealth is. All right. So after you make that critical personal decision, and it's something that no one else can motivate you to do, you have to find it within yourself, make sure it's the right decision for you. But once you have made that decision, you want to look to hire an agent like myself that'll be there to help you determine what your home buying needs are. So we'll kind of go into a little bit of that. Really want to highlight the importance of hiring a real estate agent for your process. And this is not a sales pitch. This is a saving pitch because a lot of buyers look to go into the home buying process and don't want to, the expense of a realtor. Well, quite frankly, the seller pays your realtor expenses, so you don't really have to worry about that, but I'm here to protect you. So as a realtor, once we agree to be in business together, it is my obligation to look out for your best interest. And at MG Residential, we make sure to do that at every point of the process. So really good to get a realtor on your side, someone you trust to negotiate on your behalf, understand what things are most important to you. If it's price, if it's equity, if it's lifestyle, make sure you're having a conversation with your realtor to really advocate for your needs, your wants, and your best interest. In addition to that, one thing I forgot to mention in my personal introduction, I am a construction project manager by trade. So that's what I got my undergraduate degree in. But that's something I like to mention just to provide value to my potential buyers. It does provide me with a lot of expertise when we go into the contract phase to help you guys throughout the home inspection process and really make sure that you are purchasing a sound structural investment. So do kind of want to plug that from understanding and the importance of an agent. You want to make sure people have the market expertise, the expertise about structures, which is something I provide uniquely, but really everything that you may need or want to know about this process to help fill the gap and really make sure you come out on top at the end. And then on the second column here, why you need an agent for new construction. And in addition to new construction, I'll also mention for sell by owners and just different off-market deals. It's just always a good idea to be in relationship with a realtor who can, again, help negotiate on your behalf, guide you through, and help keep you in the best situation contractually. Anybody have any questions before I kind of move on? All right. This slide just kind of highlights some of the importances of having an agent on your side and some of the specific things that we do at MG Residential to provide you guys with that complete and total package experience. So our team is very educated about the market. Being a part of Keller Williams really provides us with a lot of market data for the area. And we are some of the top producing agents in the DMV area as well. Really in-depth analysis. We're well informed. As you can see, we provide a lot of information to the community to really engage you guys. We have a great network of vendors, so lenders, home inspectors, appraisers, all of those things. It's the job of the agent to kind of act as the glue throughout that entire process, and that's what we try to do. All right, so once you've hired an agent, you want to look to secure your financing. So this is kind of a sticking point for a lot of people, understanding what I need in order to prepare for the home buying process. How much money do I need to have in the bank? That's going to be different for everyone, but there are some key things that you can do across the board to kind of prepare yourself. So when you're looking to be financially ready for the home buying process, you want to first look to get pre-approved. You can get pre-approved from anywhere. Our team at MG Residential has a handful of lenders that we like to recommend. We work with them because they're very responsive, on the ball, and very thorough. But outside of that, you can still go and find, various lenders through various search tools. But you want to make sure to first get pre-approved. So pre-approval is going to be an evaluation of 1, your credit score, and then 2, your debt to income ratio. So that debt to income ratio is how much income you pull in monthly relative to your car note, your revolving credit card debt, your student loans, which aren't as much of a factor in current times, but they'll incorporate all that information in order to determine what maximum amount of a loan you would qualify for. The pre-approval is very important in this process because especially now in COVID situations, some listing agents aren't even letting you view a home in person if you aren't pre-approved. Really trying to minimize on interaction and foot traffic in the different homes that are on the market. But also it's really just a tool to ensure that people aren't wasting time and are serious about the process, especially because the market is very competitive. So getting pre-approved is going to be the first step to that process. Once you're pre-approved, that's pretty much your ticket to go view houses and find something that you like. Encompassed in the funding process, and I'll keep this high level because, again, I'm not a lender. I don't claim to be. I like math, but not lending. Um, but once you're pre-approved, that's your ticket to go showing and viewing homes. You'll then work with the realtor to submit a offer on a home. Once you get that offer, your lender is going to have to do some underwriting processes that include an evaluation of your credit, actual documented, references of your W-2s and your income to verify that information. So after your pre-approval, your lender is going to look to further verify some of your loan information. And throughout this process, there are a couple things that you want to make sure to and not to do. So as you're looking to go home buying, you want to make sure you're pre-approved, check your credit in advance. I know for FHA programs, the minimum credit score is a 620, I think is the most updated that I've heard. So if you're in that range, you want to get comfortably above that to help further reduce your interest rate, but make sure you're keeping an eye on your credit. You're not having any delinquent payments, or there aren't any significant old delinquencies that are on your credit, because a lender will not approve your home loan until all of those old liens are satisfied and rectified. Just in a high level, if you have an old $5,000 loan on your credit or something that's unpaid, they could then take that and, I guess, request, put a lien on your home in the future. So a lender wants to make sure all of those things are cleared up, the title company as well, in order to approve your loan and get you into the home and make sure there are no encumbrances or things of that nature. So yes, get pre-approved, check your credit, prepare a down payment. Is something that's good to do. So start saving and continue to pay down debt. But some things you don't want to do are make any large purchases, quit your job, because the week before you close, they're going to want to do another verification of your employment. So if you don't have a W-2 or a pay stub, that's not going to be good for you. Don't buy a car. That's going to put a hard hit on your credit. So those are just some financial do's and don'ts as you're going through this process. All right. So once you've secured the financing, then you're going out to find a home and make offers. So this is the fun part. Everyone likes to go home shopping. But I do want to kind of preface all of you first-time home buyers with the current situation that we're in. If you're not familiar with the DMV market, inventory is currently very low, and thusly buyers find themselves in a very competitive purchase situation. So that's where, again, having a realtor agent on your side is really helpful, because we practice this on our team, within our group. We have conversations about how to make our buyers most competitive, what things we can do in order to help secure an offer for our buyer. So it's really nice to have a group of experts on your team. We have a wealth of information outside of me. We have team leads, we have productivity coaches who really just impart their knowledge on us to help you get the best offer. So as you're going through that process of finding a home and putting an offer, we're there to kind of help walk you through that as well. So when you're looking for homes, and if you're interested, you can go to mgresidential.com. We have an active database of all the homes on the market, so you can use that to search through what's available. And then as we move through the showing process, we'll go and look through homes. You highlight what you do and do not like, and hopefully at the end of the day, we find something that you love. And then we submit an offer. So you want to make your, as I mentioned, the markets are competitive currently, so you want to put your best foot forward. There's really no lowballing in today's market. We're finding that every nice, modern, well-kept home is a multiple 5 offer situation. So whenever you're going up against multiple offers, you want to make sure you're not trying to lowball, or else you really put yourself in a position to lose that potential home. So us as the realtors, we're on your side, there with you throughout the process to help navigate that situation. All right. So once you've made an offer and it's been approved, it's been accepted, everyone's in agreement. Now we get down to the nitty gritty. So this is where the agents are really get put to work to negotiate and remove those contingencies and execute those contract terms. So once you contract for a house, you likely want to conduct a home inspection. That's something I recommend for everyone, even if it's informational. You want to get a good look at the home to make sure there are no major issues. Once the home inspection comes back, we'll have a conversation about any major issues that need to be repaired. We'll send that over to the seller and get all that hashed out. So that's the home inspection. Got it out the way. After that, you're going to be looking at your financial contingencies, which is typically your appraisal. So if you're getting bank funding, if you're receiving a loan for your home, the lender is going to send out an appraiser to make sure what you're offering for the home properly equates to what it is valued at based on different comparisons in the market. I won't get too much into this process, but we can always have a personal one-on-one about it in the future. But hopefully your home appraises for the price that you offered it for, if not more. That's always good for you. And then that removes that contingency. And then one of the final things is your title company does a search to make sure that you will be the future and sole owner of the property. So those are three. I highlight those because those are three potential sticking points in the home buying process that I like to just make everyone aware of. We always do our best to mitigate these things, but like I said, in a competitive market, things can always happen. So I do like to kind of just provide that information to potential buyers about the potential areas in which we can find and experience hiccups or obstacles in the buying process. End of the day, everyone wants the deal to go through. So me as your agent, I'm always going to push for that. And typically the seller and the listing agent are on the same side. But yeah, just wanted to highlight that because that is a typical sticking point in the buying process. But once you've removed all of the contingencies and have cleared everything for closing, then you get to move on. So once your contract has been accepted and cleared to close by your lender, then you're going to move to your final walkthrough and prepare for your settlement date. Your final walkthrough will be a day before or the morning of your settlement. Your agent and the buyer will walk through the property, make sure it hasn't sprung a leak, make sure the roof didn't collapse, make sure, everything's good to go. No one, I don't know. But the final walkthrough is your final opportunity to make sure everything's good to go. And then you proceed to the settlement table. And that's where you'll sit with your title company, sign all the documents in order to transfer ownership of the property. So once you've done that, then you can prepare to move. So this is the most exciting part. You get the keys to your home and you get to move in. So really the potential to unlock a lot of different opportunities if you consider the home purchase in the 2021 year. And then after the buying process, our team loves to stay in touch with different seminars like this that we provide throughout the course of the year, as well as different social activities. We did a lot more prior to COVID, but we still try to do things that are COVID compliant in the meantime. But yeah, we stay in touch with you guys. If there's ever anything you need, like I mentioned, I'm a construction project manager. So I do like to stay with my clients and provide them with any service, plumbers, electricians, or anything they need. So as I mentioned, the MG residential team is full service. So we don't just drop you at the door. We're friends for life, whether you like it or not. So that pretty much concludes the presentation. Just a little bit of follow-up about MG Residential and our services. We are, again, a full-service real estate firm, residential, commercial, and developmental real estate, as well as offering different property management services, as well as investment opportunities. Again, one of the topics I really love to talk about. So that pretty much ends the presentation. I'm going to drop into the chat a little bit. Looks like Candace said, what about student loans? If you don't mind coming off mute maybe to elaborate on what you mean.
Hi, yes. You mentioned that when you're purchasing, they're looking at like your credit history. So student loans, like is that a detriment?
So, student loans is a form of debt, but especially in the current situation, it's not looked at negatively. Having student loan debt implies that you are looking to progress your lifestyle and your career. But as long as well, we're all in deferment, so you really don't even have to pay them off right now. But to answer your question, student loan debt is not looked at as a detrimental form of debt. You want to focus more so on revolving credit card debt, any maybe payday loans or things like that. So maintaining an active and up to date credit history is really important to combat any potential student loan debt. Did that answer your question?
Yes, it did. Thank you so much.
Yep, no problem. Looks like we had another question. Charles, is trading your car in the same as buying a new car since you're still paying it off? I would stray away from trading your car in the midst of a home buying process. So once you've contracted for a home, or if you're planning to purchase within the next 3 months, I would stay away from trading your car in because um, even though you're still paying it down, it's going to be introduced as a new loan, likely on your credit. So I would just stay away from any major purchases or trade-ins like that until after you purchase your home. Did that answer your question, Charles?
Yes, thank you.
Uh-huh. Any other questions? I'm kind of tuning in to Instagram. Did anybody have anything?
I did have a question. So you mentioned about purchasing houses, of course. How do you know if it's best to purchase a house versus having one built?
I think that's a personal decision. In this area, typically, more of the new construction homes are in the Maryland area or in the suburbs. So that's typically what drives people. You get more square footage for your buck in that regard, but ultimately just a personal decision. Any follow up to that?
No, thank you.
Hmm.
Hey,
Any?
Kristen.
Hey. Mhm.
Hey, so okay, if I wanted to purchase, since we were talking about the 400,000, dollar price range, if I was to buy a $400,000 house, what could you say the down payment will look like if I didn't go through any programs?
So when you're considering your down payment, um, it's based on your loan type, so not specifically any outside programs that you may participate in. So with a conventional bank loan, you're typically going to see a 10% down payment requirement. So of that 400,000, you'll be looking at 40,000 down payment requirement. But alternatively, you could look at an FHA loan, which would allow you as little as 3 to 3.5% of that $400,000 down payment, which I can't quite do in my head, but which I think is about $12,000 to $15,000. Don't charge me to that calculation.
Got it. And then one last question: how does the closing cost work?
So when you meet with your lender, they're going to calculate your closing costs. It's typically an incorporation of paying your property taxes in advance. That's a factor of it. As well as your appraisal is going to be incorporated into your closing fees. And then some other additional like loan generation fees and things like that. So it's going to be different for every lender, but they should provide you with a net sheet that itemizes every expense that you should anticipate in order to, summate your closing costs.
Thank you so much, Kristen.
Yeah, no problem. Anybody else?
Yes, I have a question. My name is Tracy Holmes, and the question I have is, what if you're in the home buying process, but you don't have, you have to build your credit, meaning basically that like no student loans, no real credit card debt. You really just like have a car payment and like two small bills that you're in the process of paying off. So it's one of those things where you don't have a high credit score because you don't necessarily have a lot of credit.
Right. I will say this is one of, I think, the biggest disservices our parents did for millennials, like in our decade, because I was very similar. I didn't get my first credit card until I was almost 25, and I had no established credit for a long period of time. In the home buying process, that's almost worse than bad credit, and I hate to say that. But in your situation, if you don't have any negative credit, I would maybe look into speaking with someone who does credit repair or rapid recrediting, because they can link, put you with like getting a different credit card that can help boost your credit rapidly. But that's going to be more of a strategic conversation to have with someone like on the financial side.
Okay. Thank you so much.
Mhm. Anybody else? Keep them coming.
So what are the options if you don't have any money to put down?
So if you don't have any money saved currently, there are different options for you. As Tangi might have mentioned, there are different programs. So whether you're in the DC, Maryland, or Virginia area, there are different programs for the different jurisdictions that provide grants for down payment assistance to different buyers. And they're usually based on your income, but they're very generous. It's a grant. Usually that the only stipulation is that you remain the primary occupant of the home. So if you're in the DC area, look into HPAP, HPAP, as well as DC Open Doors is another program that does down payment assistance. In Maryland, there are some programs, but I just don't know them off the top of my head. But really, if you look for down payment assistance programs in your respective state, you'll find a lot of different opportunities to, get some assistance with that, to where you will have minimal out-of-pocket expenses. But that being said, I do want to say you cannot go into this process with $200 in the savings. It's not a sound decision to make, first and foremost, but the process is expensive. So you're going to have to come out of pocket regardless for your home inspection, which is maybe $150 to $300, just depending on the property, as well as you're going to have to make an earnest money deposit that's going to have to come from your bank account, or you're going to have proof of those funds throughout the process. So while there are the different assistance programs, you do want to make sure that if you don't have any in the savings, factor that into your timeline for being prepared for this process. So give yourself about 6 months to prepare savings before you look to really get active in the process. Really quick, I had
And how much money do you?
Go ahead.
I was just going to say, how much money are you suggesting at minimum you have to have put away then?
So do a calculation based on what your potential home purchase price is. So say you're looking at $300,000, you want to look at the potential down payment for that, a potential earnest money deposit for that, and then that small home inspection fee. If I'm just kind of throwing out numbers because it's going to be different for every property or every situation, you would like to have a few $1,000s in the bank to prepare for this process if you're not anticipating any outside assistance. Real quick, I had a question on Instagram. Have you ever heard of manual underwriting? And I have not. Anyone of my colleagues in the chat might have anything to provide with regard to that. But I see your question and I will follow up with you. So. Did anyone else?
Question. What is the earnest money percentage? Do you know?
It's not specific, but the more earnest money you put down, the more competitive your offer is going to be. But typically when you're purchasing a home at a $3,000 price range or above, you want to put about $5,000 down to show that you are very intent on your offer. And that's money that is held throughout the contracting process. So while you're doing your home inspection and your appraisal, but it is subtracted from your ultimate closing costs. So it's something you put up front to show that you're serious about the transaction, but it comes out, it gets deducted from your final closing costs.
Can
My
I
name is
add that
William.
it's
I have a question.
Real quick, let's go with Deja.
Okay, perfect. All right, so going back to your initial response where you said sometimes there's about 5 families trying to buy a home as far as an offer.
Mhm.
What are some ways to gain a competitive edge other than actually offering the most money?
Well, hiring me first. But outside of just offering more than the asking price on the home, you can do things like increase your earnest money deposit. You can waive different contingencies. So the home inspection contingency is an opportunity for, if you find anything significantly wrong with the property, for you to back out of the deal. So if you waive that contingency, so say you only want to do the home inspection for informational purposes, regardless of what shows up, it doesn't matter. You're still going to buy the house. That is more attractive to sellers because it's one less opportunity for you to back out. The appraisal contingency is something that is always going to be required if you're getting a bank loan. But if you can get a cash or a private lender or some alternative financing that would not require an appraisal, that also is more attractive to sellers. And then I don't want to give out too many of our, like in-house tips. So you're going to have to book a consultation. But yeah, so waiving contingencies, offering more earnest money deposit, and then offering over asking are 3 of the major ones. All right, and then Tangi?
So if I'm going with
Go ahead.
let's say a 20% down payment and I would like to do, let's say, cash, would that be a competitive edge also going into it?
Very competitive. Yeah, that cash financing is really going to put you leaps and bounds above the rest of your competition. Yeah. Okay, Tangi?
Hey, oh yes, so I was just gonna mention, going back to the earnest money deposit, normally it's like 1% of the purchase, or I guess your offer price. So if
Mhm.
you have a home that's $620,000, the earnest money deposit would be 6,200.
Thank you. Thank you. All right. Are there any more questions? Again, if you RSVP'd for the event through the Eventbrite, we will follow up with you guys with a copy of a PDF of the presentation. If you're on Instagram, DM me and I will follow up with you. But if you guys don't have any other questions, I appreciate you guys taking your lunch break to, listen to what I have to say. I'll give you guys back the last 15 minutes to actually eat some lunch if you haven't got a chance, because I haven't. But yeah, I'll stay on. If anyone has some follow-up questions, feel free. But otherwise, that's the end of the presentation. Thank you guys for showing up. Really appreciate all the really provocative questions, and really excited that so many people are looking to, get into homeownership this year, because no opportunity like the present, first and foremost, but really want to get millennials, people of color, just people who are interested in this process, all the information and access they need. So thank you guys so much.